Hello again, everyone, and welcome to another ride-along video. I'm in the road. I'm on the road today. On the car. Got most of my hair in there. That'll do for now. Okay, I wanted to talk about this whole ETF business and where that's going, and I'll talk more about this on our AMA, which is Wednesday night. They'll probably put that out, which means that this video probably needs to be out Wednesday. So I guess I'm going to be loading it tomorrow. It's Tuesday afternoon as I'm driving. Anyway. The ETF is coming out. It's doing really well. Why do people care about ETFs? What's the big deal? Let's get into it. So if you like this kind of content, please like, share, subscribe, all that cool stuff. Share videos like this. Help this channel grow. Help economic preppers grow. More in the details in the comments about our event at the end of September. If you know of companies that should be there, we're looking for companies right now for attendees. We have a lot of booths that are available. And it's pretty affordable. If you know one that wants to be there in front of like 2,000 like-minded people that are interested in sound money, please let me know. All right, ETFs. Okay, the ETF launched this week. It's doing really well. Why? Why do we care? So an ETF, and I can't show the chart right now. I'll show it at the AMA, and I'll show it probably in a future video. But when the gold ETF was launched, gold took off. Now, why is that? Because okay, there's a limited supply of gold, and there's a limited amount of ability for people to buy it, but also the institutional investors, they can only buy certain products. They can't buy physical gold. Their rules don't allow for it, but they're allowed to buy pretty much any stock mutual fund that's out there, including an ETF. So there's lots of money sitting on the side in Legg Mason, Wells Fargo, Scottrade, Morgan Stanley, pick one. Oh man, I really got to lock down this camera. All right, somehow this camera's going to stay still, and I'll leave it there for now. We'll work with you. All right, work with you. Okay, stand's being a problem, but we'll deal with it. Okay, so you got all these institutional investors with all this money on the side that wanted to get in. They wanted to play the game of gold, right? This is before, I think it was the mid 80s where the ETF launched, like 86 or so. So I think that's right. Don't test me on it. But when the ETF launched, the ETF took off, and it went up like 3 or 4-fold pretty quickly. And the reason it did that is that all the institutional money that was now allowed to buy a gold product, or as pure of a gold product as they were allowed, could now play in the game. So they started sinking money into the ETF. Now, keep in mind, this is by definition a derivative product. It is not gold itself. Just like when you buy the Bitcoin ETF, you're not buying Bitcoin, you're buying a tracking stock. Much like when you buy QQQ for the NASDAQ, I believe it is, or other tracking stocks. So you buy this product and you think that, okay, all right, I'm going to stick with the gold example for now. You want to buy gold, you're not allowed to, but you buy this ETF, which is going to move like gold, and you get to appreciate profits accordingly. I am going to figure out why this thing jumps up and down, probably after this video, but bear with me, I appreciate you. So now they're in gold, they're tracking gold, and they don't own physical gold, but they own something that moves like gold. So for institutional investors, they really don't care, because what they're doing is they put funds in. The funds are making money as if they own gold, and then they can get in and out of it pretty quickly and take those profits. So they're in the ETF, they're making profits, and they step out of it, step into it as they see fit, but they're making money based on gold because they have this ETF open. Now this ETF thinks that all this liquidity, all this funds from these institutional investors, all this money that's been sitting on the side that could not buy physical gold because the laws would not allow them, the financial institutions, their regulations and laws, and stupidity of how they're structured, they weren't allowed. But you weren't allowed. So riddle me this: why are you not allowed to buy physical gold, but you're allowed to buy a derivative that looks exactly like gold? It makes no sense. But yet that's what they allowed. So they play the rules of the game. They make this paper tracking derivative product of gold. They buy the ETF. They get 3 or 4 times profits in a few years. They cash out. Everybody seems to be happy. Well, what soon things people don't realize is that everybody thinks that they're in gold, but they're actually not in gold. So if we get to a point where you need to take possession of the gold, or we used to have claims of the COMEX or the LBMA, the London Bullion Market Association. I think that's what it is. And you really want your gold. Like, okay, you know what? I've got 500 shares of this derivative product, and it says I own 1,000 ounces of gold. I really want my 1,000 ounces of gold. Well, you have to put a claim in, and they have to deliver it, and so on. And not everybody can take delivery now. Because these are derivatives, you're actually buying things that are beyond just gold. So let's just say, like, in theory, this ETF represents 1,000 ounces of gold. It would obviously represent more, but it sells product to the point where if the claims were there wouldn't be enough gold to satisfy the claims. It's truly a derivative product. There's not enough gold to back the whole thing. That's a problem if you started having a run on the ETF. Now, most people don't expect that, but with Bitcoin, now you're playing in a dangerous game. Now you have a Bitcoin ETF. Now that Bitcoin ETF isn't going to actually own Bitcoin. It's going to own a tracker to the price of Bitcoin. So if Bitcoin goes to 40,000, 50,000, the ETF will move accordingly. It'll move twice as fast because it's a 2x ETF. But again, you don't actually own any Bitcoin. You own a share of this ETF, which is a tracking fund. It tracks the price of Bitcoin. It will move up or down along with Bitcoin. The difference between owning Bitcoin and owning something that tracks with Bitcoin is at the end of the day, you still own Bitcoin if you own Bitcoin. You don't own anything but a tracking stock if you buy into the ETF. So you can't take possession of your Bitcoin if you own the ETF. You're only buying it. It's only a vehicle for institutional money to come in and play and hopefully make gains in terms of dollars that they can cash in and out of and take profits on. That's the whole point. Now, if you want exposure to Bitcoin, and this is the means by which you're going to do it, okay, I get it, fine. But you have to remember the rules you're playing by. ETF is going to allow a lot more funds to come into the marketplace, yes, and it will drive up the price of Bitcoin, yes, but it will also increase the demand for the actual Bitcoin, so they'll make them even more rare because people that, like, let's just say, like, okay, Bitcoin's $30,000 today. There's about 20 million. That's about $600 billion of market cap, liquidity, so on. Not liquidity, but $600 billion are allegedly assigned to all of Bitcoin right now. Now, not all of them for sale, so that's not all liquid. But at $60 billion, it's 10%. That's probably about your liquidity right now. 10% of Bitcoin is probably, if you really push for it, that's about what's available for sale. If you make an ETF, and all of a sudden that ETF is worth $60 billion, you double the liquidity of Bitcoin. So now things can move much faster. It doesn't mean you've increased the supply of Bitcoin. You've increased the supply of things that move with Bitcoin or track with Bitcoin. It's subtle. It is a difference. But at the end of the day, you don't own an asset if you own a tracking stock. You only own the tracking stock. And while things can move in terms of dollars, do you want the Bitcoin or do you want the dollars associated with Bitcoin? That's what you have to ask yourself. Now, if you're stuck in a 401k or if you're stuck in, you have to use these products, I get it. But for true investment, not financial advice, but if you're really a Bitcoin person, you want the actual Bitcoin and you want it in an actual wallet you control and you have self-custody and you can be your own bank and all that good stuff that we talk about over and over and over again. So that's my take on the ETF. What is your thoughts? I would love to hear what you guys think. What are you thinking about it? Do you think it's good or bad? Is it the right vehicle to get more liquidity in the market, or is it just destined for being another financial product that's going to mess things up? So leave a comment down below. I read them all. But for now, I'm going to close the drawer in the bureau, say follow leader, and I'll talk to you soon. Take care.